Hello, guys. Welcome to another edition of Forex with Marathon. So today, as you can see from the title of this video, uh, top-down analysis for beginners, understanding top-down analysis. So I'm going to show you how you can do top-down analysis, and I'm going to use it to analyze Great British Pound US dollar against next week's market, because you know the market will open very soon. The market's opening tonight, and I will use this. I'll show you guys how I use top-down analysis to analyze my currency pairs and to plan for my entries, and also execution, entry points and exit points. And it also gives me a good view of the market and how to look at market, and also reading price action and understanding everything based on the higher time frame. So if you're new to this channel, please, I would like you to like, subscribe, and drop a comment on the comment section, please. So anytime I drop any of these videos, you'll be the first to get them, and also to help me build a strong algorithm so you can get other people interested, join these forex things and learn for free. This is free knowledge I'm giving to you guys. So the only way I want you guys to appreciate me is to hit that like button, hit that subscribe, and drop me some hard comments in the comment section. And also the link to my Instagram, Telegram, WhatsApp will be available on the link. It's available on the link below. So just look down on your screen. You see the links to my WhatsApp, Telegram, and Instagram, and all my socials. You get to me. The broker I use is XNet. It's one of the best recommended broker I can advise you to use. If you're in Cameroon, you can deposit with Momo, withdraw with Momo, Bitcoin, all cryptos, bank card, PayPal, the best, and the execution is very fast, tight spread, fast withdrawal. So the link to XNet to create your account with XNet is also in the description below. So without further ado, wasting much of your time, let's just go into what I'm trying to explain. So I like to look at my analysis on a 1 day time frame, because also I do this because for me, I am an intraday trader, and what I often do is just within 4 hours. So but I like to look at my time frame from 1 day time frame to know where the market is going to. Looking at this market and looking at the structure, I look at the action price it's giving me. I can see clearly that we are in an uptrend, right? We have some equal highs here. We have highs here, high, and this is our lower low. And currently the market is at this level, right? The market is at that level. So there are two things involved. The market could bounce from here these days, next week, and start shooting back up, because remember the trend is in an uptrend. Okay. So once I know that already, I know what I'm expecting from the market. So at this level, what I'm interested in is in this level and this level. So this is the high and this is the low. Low, swing high. Why? Because this low is responsible for taking out this high, and so the swing high at this level. So we are playing within, everything we are doing is within this structure here already. So I'll go down to the 4 hour time frame. 4 hour time frame now to look at the trend, the direction inside the direction, right? So there's a major move and there's a minor move. So now we have a small downtrend, which the overall trend up, we'll have this one as a small retracement to the downside. And looking at this currently, what can we see here? You can see clearly that price got to this level. So what is top down analysis? So I took from 1 day, now I'm on the 4 hour. So at this level, I saw that there was a change in character here, right? Leaving behind what? A supply zone that hasn't been mitigated. So once I know that, I know what I'm looking out for. So it's a supply zone here that hasn't mitigated, and prices left continue going to the downside. And price got changed character. What do you happen? We saw breaks of structure at this level, right? Break of structure, break of structure, break of structure, break of structure. When you say a break in structure, the break in structure signifies a continuation in trend, right? So the only time you stop triggering break of structure is when you see what? A change in character, and at this level, you see a change in character. Structure has been taken out. This whole structure here has been taken out to the opposite side, right? So over the high here, market can give us another lower high here, another one here at this level. We got a change of our structure. So now maybe we should be looking for buying opportunity with time when in the higher time frame. But at this level, the reason why, so I'm going to look at the left and see why the reason for price turning here and giving us a change in character, or maybe it was because of this demand zone that was here, and you see price, as price tap into that demand zone, it changed character, turning that one we are about to have a change in the trend of the market, right? So we're having back on Monday, we're going to have a change in the trend of the market. I scale now down to 2 hours time frame. Okay, 2 hours time frame. What do we see on the 2 hour time frame? Price got to this level. So you see there was a high here and this was liquidity sweeping up here. Of course, above this high. And you see price came, clear liquidity and tap into what? A supply zone that was hiding here on the 2 hour time frame. Right? So all this everything above here was liquidity because normal traders will see this as what? Double tops. And when they place their double tops, when they take their double tops entry, where do they put their stop loss? Stop loss will be above here. So that's why we call liquidity. Areas of pending orders and stop loss. So most of them have their stop loss above here at this level. And you see, this is where the liquidity that was building up the market can clear other liquidity before dropping to the downside. So you have to make sure in the market where is your position. You can be right with the entry of the market, you can be right with the direction of the market, but wrong with the timing, right? Because after all, price still came down, but price discovered that there was a lot of money sleeping above here. A lot of people had orders here, pending orders here, and liquidity above here, which is psychologically correct. Because this gets to 1 hour time frame, you see the same thing, but now a bit bigger. So at this level now you see still the nice doji candle sleeping down the demand zone, supply zone, and price tap to that supply. What happened? Price tap into that supply. What happened here? Price took out this low here. So at this level we call all of them equal lows. So at this level this was equal lows, and this will have people also that they wanted to have a double bottom to stand by. So equal lows, and what happened? There's liquidity sleeping below here, right? That liquidity has been taken out. So that's how you try to read price on the higher time frame, breaking down and understanding break of structures, change in character. Once you understand that, you understand the direction of the market. You know your technicals, you do this, you practice this all the time. Do different currencies, practice until you can look at the chart and just read from afar. So what happened? When price came here, it did what? It changed character at this level, right? So you have double bottom here, double tops, right? So this was liquidity sleeping here. So everybody, a lot of others, people had entries here. And normally, when they have entries at that level, where would they be targeting? If they have entries at this level, they will target back at this level down here, right? And their stop loss should be above here a little bit, right? Or even, let's say even here. They got excited, price was pushing down. So then price, right, got this level as being broken. Yeah, it break quite alright to break the level, but it was just going to clear something on the downside, and instead it reversed immediately. You were in shock, like, oh, you had your stop loss at break even, or you were holding it straight to your CP, and immediately you thought it just won't pull back. It just went and took out your stop loss before coming to the downside, pushing back up, right? So that normally, normal trader will going to see that, but at this level, you just consider this is the double top, and now this is what we call now the change in character. This is the change in character because at this level the market was still on a downtrend, giving a series of lower lows and lower highs. Now, if price came in, what happened? Change in character here. I have a change in character here. Now, let me just take this out so that I still understand what I'm doing. So I have a change in character here. Clear change in character at that area. And what do I have here again? The structure was formed here, right? Structure was formed here. So as the structure was formed, price was rejecting that structure, struggling to break. How do happen? We had to break weak out here, taking out all the highs, and normally those who enter trade from here. So you have people. So liquidity comes. So how do liquidity comes in the market? Now this is the building of liquidity here. So everything here is stop loss. A lot of stop losses are sleeping here. Right, a lot of stop losses are sleeping here. So it's called a pool of stop loss. Stop losses are sleeping here. A lot of stop loss because everybody entering this trade, where would they have their stop loss? Psychological. The market knows that your stop loss is there. Everybody entering this trade at this level. Every stop loss will be here, pending orders because anytime you think the market comes to that level, it drops. Pending orders, stop losses will be here. So everybody, so the market knows very well because they are targeting this low here, right? The market knows very well that this is what's happening, this is what's happening, this is what's happening, this is what's happening. It came here, drop, came here, break. So normally there's a trick here. So market there's always two things in the market. There's a small trap here, right? You thinking price has broken this level. So you think normally you come back from here. But yes, you are correct that it's going to come down, but you are wrong. You have to identify what could you identify at this level. But you have to understand this was as a result of the CPI data that came out, right? This was this pull, this bullish move to the upside was a result of the CPI that came out, and it went for liquidity. And if you look around, you said there's what a fair value gap here, right? A fair value gap. So how was it? A fair value gap at that level, fair value gap here. So have a liquidity steep here. So this was our liquidity trend line, right? That's liquidity here. So price came up for the liquidity. Tapping on what? Tapping on this. That place being a supply zone. So have a supply zone at that level. Now, after price have tapped the supply zone, what happened? Price break structure here. So called our break of structure. That's on the 1 hour, right? Once price break of structure, what was below? There was a fair value gap here, right? That's a fair value gap. There's a fair value gap here too. Things you need to understand. And price tapped that fair value gap, what happened? We can also assume this to be, or consider this to be a structure that was broken, right? As you can see what here, that this is our change in character or change in market shift, right? Change in market shift after the change in character. So the market shift came from what? Coming to a lower lows. Now it came change character from what? A new high here. So this now we consider this to be our new high. So what are we saying going to say? There's a possibility that price will bounce from here and go back. And what are we seeing here? Top down analysis. Take your time. Try to read the chart very well. Take your time. No hurry. This is how I cash entries in the market. This is the circuit I'm giving to you. So now I've seen this on the 1 hour time frame. So what did I go to? I go to 30 minutes, which is, it will look almost the same, but it will give me a clear picture. So you're going to upgrade. Right. This is the 30 minute. I expand. Yes, my fair value gap is still very, very clear on that 30 minute. Okay. So I go to 50 minutes. So you see how I started. I start from the 1 day time frame. Now I'm on the 15 minute. What am I doing? I'm collecting data and I'm having my plan. At the end, I'll go to my trading journal and journal what I'm expecting, how much I'm willing to lose on this trade versus how much I'm willing to gain. Right. So I'm going my interest level. So this is what I'm saying on the 15 minute. And what happened? There was a fair value gap. This is the reason why price turned from here. Could it be the reason? Or we have because of this other block? And you see there was something above. So it took another other block. It never respected. It violated, right? It violated this supply here. Reason being what? An uptrend is coming into play, right? So now demand is now in control. See it violating supply zones, right? You see it violating supply zone. So demand is now in control. So this was a supply zone here that was violated. This whole bullish candle here we can consider as a supply zone. It was violated, and the same thing happened here. And you see, we call this technical analysis because history always repeats itself in the market, right? So this is how you need to analyze. I have a new video I dropped on how to use TradingView. If you don't know how to use this stuff, just go to my YouTube channel, check on the videos, and upload. You see how to use TradingView for beginners. TradingView for beginners. You see the video and you learn how you can easily navigate this tool as fast as possible. Okay, so now what happened? Once price took out that high, violated that supply, what happened? You have an internal break of structure now. So what do we have now here? Liquidity, right? This is liquidity, formation of liquidity here. So a pool of liquidity. So I will term this area, everything I down here, I'll call it what? Liquidity. And that is where I want to enter the market, right? That is where I want to enter the market. And at this level, Having a pending order here is a good idea for me. Having a pending order here is a good deal for me. So you see, a stop loss is not, it's just 10 pips, right? Stop loss is just 10 pips, and there's money here because also I know that what there is liquidity sleeping here, and the market is going to come for it. Why? Change in character, break of structure, break of structure. This is another, this is higher. So so the market needs to do what? Come and break this. So when I look at it, my take profit is 65 pips, stop loss is 10 pips. That's 1:6. As simple as that, guys. So just use this analysis, use this style, and see how you can analyze the currency pairs. As simple as that. So guys, thank you very much for staying this long on the video, on the call, and I appreciate you. And more videos will be coming. And please don't forget, if you watched till this end, I want to thank you for sticking through. And please don't forget to hit that like, hit that subscribe, and drop some comment. I wish you the best of the best this week, and make sure to be a profitable trader. The marathon continues.